Welcome back to Talking Real Estate, the podcast here at Lakeland Real Estate. I am the special host today, Larry Berry, the managing broker here. I've got Jeff Conway, First Pryority Bank, has graciously joined us today and wants to talk interest rates. So appreciate it, Jeff. Tell a little bit about yourself before we start.
I work with First Pryority Bank here out of Pryor, Oklahoma. I have been in mortgage and real estate for the previous 20 years. And I specialize in home lending, new construction, rehab loans, and basically anything with primary residential lending.
Okay. So I know we're in the first week of August, if you will, right now. Interest rates seem to took a little bit of a dip at the end of last week. What do you think you're forecasting maybe over the next month to 2 months and even further out?
So currently rates are pretty volatile. We did see quite a drop over the last 3 days. And then more recently, they've kind of leveled out and even gone back up a little bit. So I think over the next quarter to even into the first part of next year, we're going to slowly see rates drop. I don't think you're going to see them be as volatile as they have been recently, but over the next 6 months to a year, I think we'll continue to see rates drop, and there will be some advantages to the buyers, and so hopefully we'll continue to see some improvement.
Yeah. So one of the things that people correlate is they hear the Fed's talking about dropping interest rates. You and I both know that doesn't mean mortgage interest. That's just prime. Try to explain the difference there. I know you talk about a 10-year Treasury bond, and that kind of follows your mortgage rates closer than prime, obviously. Explain a little bit about how the prime, when the Feds say we're going to drop rates, doesn't necessarily affect mortgage immediately or at all.
Okay, so prime rate is basically when the Feds talk about, hey, we're going to lower rates a quarter or we're going to lower rates a half, that directly affects prime rate. That is an actual would affect your rates on car loans and home equity lines and consumer loans immediately, because that's what those rates follow. Now, mortgage rates more along the lines follow news like unemployment rates, inflation, and so when we hear like of a bad jobs report, you'll almost immediately see improvement in long-term mortgage rates. Now, when you hear about inflation, that's what's basically driven our rates for the last couple of years, and so we've had a large history of inflation recently, and when that happens, rates tend to increase. So what's happened recently in terms of rates dropping is that there was a bad jobs report, and it was considerably bad, so we're seeing an increase in unemployment, and so when we hear those things, interest rates start to drop pretty fast. So it may seem surprising, but anytime there's actual bad financial news in the markets, it's actually a good thing for interest rates.
Yep, I would agree with that for sure. You immediately start to see the mortgage adjusting accordingly, I feel like, at that point.
Yes, because interest rates move all the time. I mean, they're up, they're down. And they can move quite a bit in a day. We're seeing it more so now than ever in terms of the volatility of the market. But most of that is driven simply by financial news more than anything. So when the Fed actually speaks, that's a big day. And when they hint to lowering future interest rates, then that will also spark a time where rates will start to decrease.
Gotcha. So, Jeff, as a mortgage lender with First Pryority Bank and obviously many years of experience, walk me through the process without going into too much detail. I don't take up all your day, but walk me through the process of first-time home buyers, repeat buyers, and what you do and how you fill the gaps for those people.
So initially, I like to start out with a general conversation. It can be overwhelming to most people in terms of what we do, but the most important thing is just discussing what your goals are, what you're trying to achieve for yourself, yep, and set a budget for yourself, and then we kind of go from there and try to work our way back in something that's going to work for you.
Okay. So someone calls you up, calls me up as a realtor, says, hey, I want to look at houses. I get them in touch with you. They call you, you get them pre-approved. We kind of go from that process. I feel like in the market, more people are concerned right now with how much is my payment. It's kind of the go-to, if you will, of whether I can afford a $250,000 house or a $300,000. That's irrelevant. I need to know how much it costs me a month. We've talked off air about insurance. We've talked about interest rates. We've talked about taxes, property taxes, and all of that affecting that monthly amount, which brings the amount of house they can afford down, obviously. So with all of that being said, the home buyer, when they contact you, are going to give you their W-2s, going to give you check stubs, things like that. You're checking that out, telling them this is where your monthly payment would be, and then accordingly adjusting sales price, I guess. Then you come back to agents, the home buyer, and say, hey, you can afford a $250,000 house to be in the payment range you want to be in. They go out and they find it, go under contract, and then pass that over to you, right?
That's correct. It's it can be overwhelming to folks that don't do it all the time. So my advice is don't let it overwhelm you. Don't let the process overwhelm you. Don't try to do all of the math on your own, because a lot of the things that you see on the web and other things are honestly not very accurate. And so it's important that you talk to a professional to really, sometimes it's not about the interest rate as much as it is about the loan program. And so, there's multiple loan programs, multiple options for different people. And when you understand that, it helps you make better decisions.
Yeah. And one of the things that you've talked about that you guys offer is one that doesn't have PMI, and how that affects maybe a higher interest rate. But the PMI, and I'll let you talk details of what PMI is, but whenever a loan doesn't have PMI, that's a pretty substantial monthly savings.
Yes. So PMI is basically a fee that you pay to the lender for not having enough equity in the transaction. Generally, that's anything above 80%. There are some loans that have PMI regardless of where you are with loan to value. But First Priority does have a new loan that we actually keep in-house. We service it, we underwrite it, and we do 89.5% with no PMI with extremely competitive interest rates. So that's something that we've recently developed on our own, and it's exciting that we have the ability to offer that now.
So Jeff, tell me a few loan options that First Priority offers.
Well, so we offer basically every loan that's available in terms of, we offer conventional, FHA, USDA, the Native American /184 loan. We also offer new construction loans, land loans, basically anything that's going to deal with your primary, even secondary and investment properties that would be owned by an individual.
And you guys also do double wide, single wide trailers that meet certain guideline. The double wide, you can do a purchase of land and place the mobile home on it, correct?
That is correct. We do single wide, double wide, and also land mobile home purchase transactions where you can buy the land and the manufactured home and place it on the property with just one transaction.
Nice, that makes it handy. Keeps fees down that way. So Jeff, what kind of advice would you have for buyers in the market?
Well, for first-time home buyers, or for anybody that's actually trying to do a real estate transaction, is speak to a professional. Don't assume that you're not qualified. Don't assume that you may have credit issues or income issues. There's a lot of things that can be done to help, and you really, the sooner you get involved with trying to make the transaction help, the better off you're going to be, because you can get a professional to help maybe with the credit issue, or help you understand your income, or help potentially understand a budget. A budget is more important than anything, in my opinion, when you're looking to purchase a home.
And that's great advice, because more times than not, buyers who reach out to us to see properties, they're like, are you pre-approved? Well, no, I want to find property before I talk to a lender. And I'm always like, you need to talk to the lender first, because that's going to give you the information you might need. So that's great advice. Get a hold of the lender, find out what your issues may or may not be. They may think they're going to have issues and they're a little embarrassed or hesitant to call a lender, but I strongly agree with that. So Jeff, we're going to put your information online and availability, but you might give us some contact info for yourself. And
yeah, I'm Jeff Conway, First Pryority Bank. Probably the best thing to do is, if you wanted to speak about anything in person, is to call my cell phone. It's 918-264-9850.
Okay, great. All right, that will wrap it up for today's episode. Thank you for watching and following. And as always, hit the subscribe button and see you next time.